Hello, everyone. Welcome back to Sudden Wealth. I hope you guys are doing very well. What a crazy rest of the week that we've had. A lot of things to talk about. I think I will divide this video in about three topics. So, one is the real economy, the other one would be stocks and bonds, and the third one would be crypto, which is one of the main reasons why I am on this channel. So, actually, before I came to this video, I actually was watching one or two clips of my old videos, and I found a few of them, but I would highlight one which was from 21 October 2023. And so basically, that was 4 months after the creation of my channel, 4 months and a half, give or take. And I was discussing the possibility of a recession in 2024. And what I said, and I think Karim West, one of my older followers, Alexander Braga, also one of my old followers, they were commenting on this. When I created my YouTube channel in June 2023, I predicted that we were going to have new all-time highs in the stock market before Q1 2024, with the exception of the Russell 2000. Now, mind you, that this was at a time where everybody was expecting that the Fed was going to cut rates in September and October 2023, and that a recession was inevitable in 2023. I said the fact that everyone was expecting a recession in 2023, I said no way it's going to happen, because that's not how recessions come around. They come around when people are not expecting it, when everyone is convinced that the worst is over, that everything is good, and we can move forward. And I said in that video, 21st October 2023, I said I wouldn't be surprised if we actually had a recession in 2024, because basically at the same time, if you would go on CNBC, Bloomberg, Reuters, Financial Times, all the economists said they saw no way we're gonna have a recession. The top bankers from Goldman Sachs and the likes also didn't see any possibility for a recession within the next 12 months. So I said, now you should be looking for a recession, because all of these, brains are agreeing that a recession is impossible, or they don't see it how it can happen. And I said, that's when a recession can come. And now talking about the real economy. I suspect that the US is already in a recession, and I don't think it started, in August. I think it started at least late May. Okay, now, will the government be truthful, like the way they've been truthful reporting these terrible job reports? Or will they fiddle the numbers in order for the Democrats having a better shot at the election? Because I do believe that if we start having contracting GDP quarter, and this would be ending in June, and then another one ending in September, if we end up finding out that we are going into recession, and that we have a quarter, let's say we have the numbers in October or late October, and we discover that the economy is contracting, I think that's the nail in the coffin for the Democrats' aspirations. So will we be allowed to see the numbers in reality before the election or not? Who knows? Very difficult to say. I've been saying here for quite a while that the job reports are very weak, and they've been very weak this entire time. I've said hundreds of times that even though when the job creation is surpassing expectations, people are not looking at the inside of the reports. Full-time jobs are disappearing, part-time jobs are being created, a lot of government jobs, which are non-productive, and a lot of people getting second and third jobs because they can no longer afford their bills with one single job. That's not a sign of a strong economy, that's a sign of a weak economy. Now, be mindful of something. This is the real economy. Garbage. Now, this has nothing to do with the stock market. Very important. Don't confuse any connection between any of these and the stock market. Stock market is driven by something else. It's driven by liquidity in the system. That's it. By the debasement of currency, by the devaluation of the dollar versus assets. That's how it's driven by. So when people say, oh, the economy has not been very strong in the past 15 years. I mean, we've had one of the lowest growth rates on average ever in American history. Yet the stock market has done wonderfully. So there's no connection between one and the other. To be clear, we are now in the first segment discussing recession, real economy, people suffering. People are suffering. I mean, inflation has dramatically increased under Biden. The border is a complete mess. And I just find it so amusing that the same people that used to be on television nonstop from the Democratic news networks, CBS, NBC, MSNBC, CNN, there are hundreds of clips of them doing nothing but trashing Kamala Harris. And all of a sudden, she became the best politician of all time. It's so obvious to choose her. She's now the best thing since sliced bread. Oh my God, this is the best. This makes Obama looks like nothing. This is the best thing since Roosevelt. One after the other. So but this is the life we live in. We live in a world of propaganda. We stopped having news, particularly when Trump was elected the first time. We no longer have news. We have propaganda, and that's why the majority of people get their news from social media, places like Twitter, and no longer from the classical media. But I digress on that. So it's becoming apparent that recession is coming, with the unemployment raising to 4.3%. Once again, the Fed is a bit behind the curve, so they should have cut rates not in July, but actually around March, April, because that all these indicators that we're now receiving, the unemployment, etc., all of these are lagging indicators. So the negative effect is already much worse than what we're seeing in the numbers right now. And in summary, yes, the real economy is garbage. People are suffering. Inflation has decimated a population that already lived to a great degree from paycheck to paycheck, and that will not improve in the short term. It's not like the Fed starts cutting rates and the real economy immediately has access to all this credit. We've already talked about this at length before. The Fed wanted to get out of the money printing business. However, it cannot, but it needed to show it was doing something to fight inflation. So that's why they raised rates so much. What did I say in my first videos back in 2023? Do not underestimate how long the rates can stay high. I said there's going to be a point where you're going to see it in the economy, and it's going to be very clear that something is deeply wrong, but you can have rates high for 1.5, 2 years before you see something really bad happening. And voila, they started raising rates in 2022, we are in 2024, and only now it's becoming really apparent to everybody out there that the time for high rates is over, and we're going to be slashing rates, by the way, much faster than we raise them. Wait and see. So, with that, you see the bunch of all the companies are missing earnings, firing thousands of people, and that will continue, in my view, over the next few months. Now, going into the stock market and to the bond market. Now, TLT, the bonds have exploded to the upside, basically pricing in further and further rate cuts. A 50 basis points rate cut, it seems now that what's going to happen. I think the probability of that jumped to something like 72%. TLT rose 3% on the day, which is the long-term bonds, which is a lot for that market. The dollar has collapsed because there is now being priced in further and further money printing, And stocks which have been priced for perfection have come down to reality, a little bit to reality. So they've sold off quite a lot during the past week. And we are starting to reach some interesting levels. And this is where my opinion needs to be made very clear. Okay. So what's been happening is essentially since the currency is being devalued every single year, and even though the rates have been high, more money has been created due to the deficits. So you have two ways to create liquidity in the system. Either the government produces large deficits, or the Federal Reserve prints a lot of money and increases its balance sheet, or both at the same time, which is, I think, where we're going to start moving towards. Now, typically, the rate cuts are buy the rumor, sell the news event. I've said this many times before. Will this time be like that? Or are we already pricing in the rate cuts right now? To be seen. Not clear yet. And it will depend on how the expectations will align until then. So that will need to be dealt with later. Now, what I think it's happening is stocks nowadays move and adjust much faster than they used to. See, in the past, these things used to take 3-4 weeks to actually really filter out. Nowadays, look at the Russell. The Russell was very undervalued. It jumped, 12, 13% in a month. That's it. So you have the adjustment to the upside very quickly. Same thing when it goes to the downside. That tends to happen progressively as your currency becomes less worthy over time. So volatility will always be increasing over the next few years due to the currency being devalued non-stop. Now, I usually look at the NASDAQ 100. I don't care so much about... Oh, by the way, to keep things into perspective, I mean, the S&P is still up 10+%. The NASDAQ 100 is still up 10+%. However, we did breach certain levels. What I think is going to happen, personal opinion, is I think either we're going to have another down week, and that will probably be the last one, or we're going to have a bit of aggressive selling into certain levels. So a fast, and I'm more inclined to this one, fast selling into certain levels, followed by a big week in terms of recovery. When I say week, I'm not talking about week, W-E-E-K. I'm talking about week, W-I-C-K, when the chart does like this. No? Something like this. To be honest, what we're doing is we are approaching certain levels, certain moving averages. That's all we're doing. So I do expect the NASDAQ 100 to stop at around 18,000. It's at 1840.40. Can it go down? Yes. So to around give me 1 second. Sorry, guys. I would say somewhere between around 18,000 should be good support. If we break that, we can go to about 17,250, and I do believe we're going to stop there. At the worst, I think the S&P still up 12.6% on the year. The S&P is actually at a support level. It hit a support level today at around 5,300, but it can go at the worst to 5,000. It can still go up until around 5,150. So somewhere in between. The Dow Jones, I think, still up 6% on the year. It actually hit a big support area at around 39,500 and has already recovered. It can go to 38,500, around that, and at the worst I think we'll go to 37,500 at the worst. So around 38, 37,500, 38,250, around those levels, so give or take. And finally, the Russell can go, because it has less structure, can go to somewhere between 2000 to 2025. Once again, I wouldn't be surprised if we see about 2000, 2025. It actually hit a big support area today, and it recovered from there. But I do think it's possible that we start the week on a negative note. We have a quick reversal, and probably the worst of the sell-off is done. And when it comes to crypto, we are still exactly on target. In mid-August, as I mentioned, we should start to go up. Once again, I want to make reference that I'm not expecting that we're gonna go. When I say we should start to go up, please don't interpret this as, does that mean that as soon as we get on the 15th of August, we're gonna explode to the upside like 100k Bitcoin? No, that's not what I'm saying. What I'm saying is we should start going up regularly, and Q4 2024 should be quite a strong year. Actually, I wouldn't be surprised if we do have a rate cut in September, and that ends up being the bottom for risk assets in general, and we just go up from there. Now, there's a CME gap at around 58,000 in Bitcoin, so I wouldn't be surprised that we go to 58,000 in Bitcoin. That would actually be very bullish, because we would put in place a triple bottom, one at 54.5, then 52.9, and then 58. You would have very strong three bottoms within the 50k range, and probably that would be the last time we would see Bitcoin below 60k forever. In terms of Ethereum, bit weaker, can go to 2,750, 2,800, give or take. But I do think we should stop there and then continue moving forward. And then it's all about the liquidity cycle. It's going to accelerate. More liquidity will be pumped into the system, and then the risk assets should be fine. Once again, my target is 2025. I don't care this much about these short-term movements. It would be much easier for me to come here with a video like this. Oh my God, we're going to go to zero. The reality is, stock market is retesting some important moving average on the daily charts and on the weekly charts, and so far has been nothing but that. We were priced for perfection, so we need to reprice it. People always get nervous when they can feel a recession is coming officially, meaning that has nothing to do with the real recession being lived in the real world, but as people believe, as the market believe that there's a recession, there's always some adjustments, and then they turn on the money printer, and you give a couple of months and the liquidity starts pumping into the system, and risk assets resume their way up. In the meantime, you need to endure Meet Kevin's collapse and Mad Max in 2 weeks kind of videos. You need to endure Peter Schiff probably in his podcast will make a Black Monday prediction for the 19th time in 2 years. You need to see a Harry Dent celebrating, saying that the bubble has popped and now the stocks are going to go down 85% and 94% for the Nasdaq. You need to endure all of it. People should like red candles, but they don't. They like green candles. So, and these people are experts in leveraging your fear, your natural fear, most likely to try to sell you something, either their funds, their newsletters, or their courses. And at the end of the day, all of this works against you. But that's not the point. They make a lot of money out of you. You see, as I mentioned, I could have come here, make a video with my hands on my head, crying for 3 hours non-stop. Or I can say we are pretty much testing moving averages, pulling back. Bonds are going up, which stabilizes the market. And liquidity is coming in full force, maybe faster than people think. And don't be surprised if the Fed is already using some mechanisms, like putting some SPVs in place, like they used to start buying some of these assets even before they announce anything to the public. By the way, Nancy Pelosi just accumulated a huge amount of NVIDIA, so I get the feeling that she knows something that we don't. After all, she outperforms even Warren Buffett, so that's how good she is of a trader. Apparently, if you're in the U.S. government, you have a lot of time to become a magnificent trader. And with that, guys, thank you very much for your support. As you guys know, red candles excite me the most. That's when people lose their mind and make poor decisions. And here I am to capitalize on those exact poor decisions. And with that, thank you very much. Try to enjoy the weekend. It's the summer. Enjoy the sun. The world is not coming to an end. And no, Mad Max is not going to happen in 3 weeks. Thank you very much, and I'll catch you in the next one. Bye-bye.